Move now, though, to Delta Property Fund. That's their listing in the real estate holdings and development sector of the JSE, and that's today. The fund issued 119 million linked units in an oversubscribed private placement, and that raised 980 million rand in advance in pre-commitments from institutional investors and private client brokers. So joining us for a bit more on that is Sandile Nomvete, who's CEO of Delta Property Fund. Morning, Sandile. You don't even need to go to the stock exchange this morning. You've already got your commitments.
Thank you very much, David. Yes, as you've already mentioned in your introduction, we were very well supported by the institutions. But the interesting thing was that, we were quite fortunate as well that, even from private clients, it did come through to support Delta. And this was obviously important for us to be able to create a level of liquidity. Every new listing has a challenge about liquidity, and we as the management team have taken that to heart, and we're quite pleased by the support that we've received from the market to date.
You talk about the quality of your portfolio, given that you're exposed to government office takers, renters, SARS in particular. On the one hand, that's secure and you get a steady increase. On the other hand, what kind of growth do you get? You're not looking at being able to raise the rents just as they're secure on the one hand. It looks very stable, but does it offer great growth?
It offers a superb investment. It's actually quite a compelling investment opportunity, Dave. I think the key thing is this. The property investor is looking for certainty. We, through the portfolio, have escalations between 8 and 9%. We've got long-term leases. And the type of people that invest in property are your pension funds, people who are really looking for that growth and distribution over the period. Now, we have spread the risk, throughout South Africa with Pretoria, Durban CBD, Cape Town. We are actually represented in basically all of the provinces except for Mpumalanga. So we have really tried to be as wide as possible in terms of representation, in terms of the geographical spread. Mm-hmm. In terms of growth, we've got quite an attractive pipeline. We've got about R1 billion worth of assets that we are currently discussing at board level, which will obviously add to that particular growth.
Of course, you've highlighted the kind of spread we're looking at on a geographic basis, Sandile. When it comes to your actual portfolio, you're looking at a portfolio right now that consists, 92% of office space and then 8% of retail. To what extent should we be anticipating shifts in that regard?
So, Alicia, can you just repeat? I couldn't hear you there clearly.
Just looking at your portfolio right now, I mean, you're looking at 92% of that being made up of office space and then 8% of retail space. To what extent should we be anticipating shifts in that regard in terms of a diversification of your portfolio moving forward?
Thanks, Alicia. No, we do anticipate that, the non-government or the retail component will constitute between 10 and 15% of the portfolio as we grow forward. Part of the rationale for the listing has been, to obviously bring in non-government tenants, and our mid to long-term strategy is to probably have 60% government/SARS as a tenant, with 40% of our portfolio made up of non-government related tenants.